The headline reads, Pops, inventory buildup suggests incentives may be coming. Those that got greedy are going to be paying the price. It seems new car inventories are bouncing back to their pre-pandemic levels, which means dealers who were charging additional dealer markups, price gouging folks, they could be feeling it kind of soon. We've got inventory sitting on dealer slots again.
Some, yes. Not approaching pre-COVID levels, according to Cox Automotive, we're at 1.8 million vehicles on hand. And that's nowhere near the 3 to 3.4 million that were on hand in a typical month prior to COVID.
Charlie Chesbro, the Cox Automotive senior economist, said, quote, new vehicle inventory climbed through December, and this has been a trend. The quote continues, nearing what used to be considered, quote, normal levels in the pre-pandemic era. That is BS.
Yes,
because pre-pandemic era was more than 1.8 million vehicles in inventory.
Much more. It was 3 million to 3.4 million. He's talking about how it's approaching a 60-day supply, which was considered ideal, except that every manufacturer always had more than a 60-day supply of cars in inventory at their dealerships. In many cases, the day supply was 90 to 120 days, which is a far cry from a 60-day supply.
Dad, we had inventory levels at 1.8 million in December,
yes,
up from 1.62 million in November, and we've seen year over year a 66% increase in the amount of inventory at dealership lots. That is significant. And you are right. You can speak to this. When you were in your career, you had some RDXs, some RLs, things that would just sit on your lot. The day supply for those would be hundreds of days.
An SLX. You could have one and you could have a 300-day supply.
Exactly.
Yes.
So yeah, we are not necessarily back for all brands. However, some are, Dad. The days supply, let's pull the chart up on the screen. The days supply at Buick, Jeep, Volvo, Ram, Jaguar, Infiniti, Dodge, Lincoln, Chrysler, Audi, Ford. We'll stop there.
Yes.
All well above
the
national average. Buick, for example, Dad, has well over 130 days supply of inventory.
They do. And, they have a small customer base to begin with.
And if they have 130 plus day supply of inventory, that means
you're going to see incentives. And may I say that the initial headline that you read was something that we have been talking about for, 2 or 3 months now, that inventories were starting to grow. Day supply was starting to increase. Manufacturers were going to become a bit concerned because interest rates were rising and sales were stagnating, that perhaps we suggested there would be more incentives moving forward into 2023 because of those factors. And suddenly on the 12th or 13th day of January, Cox said, hey, you know what?
Things are slowing down. Inventory's building up.
We're going to see incentives.
You're going to see incentives this year. You're absolutely going to see it. And it's especially for the brands that we mentioned a moment ago. I mean, again, national average is creeping up on 60 days of supply. And we have some brands like Volvo, Jeep, Buick, for example, well over 100 days supply of inventory. Those are going to be the brands where you can get the best deals.
I would think so.
And Dad, I've been talking to a Volvo salesman.
Slow.
Just slow. Like very, very, very slow.
It's January.
I know. I'm just saying.
Let me remind everybody that the 2 slowest months of the year are January and February. So for it to be slow this month is, if it was busy this month, then something would be wrong.
CarEdge.com/finance pops. You can go there and do what?
You can finance, refinance, save money, and it only takes seconds to do.
All right, go take a peek. Don't go to the dealer without getting a pre-approval. We're here to help. So we should expect to see the amount of new car inventory continue to go up through January and February. And we should also continue to see the pressure on OEMs to offer incentives go up in January and February to spur demand.
And dealers are going to be hopeful that the spring selling season arrives the beginning of March and that they see a major uptick in customers coming in and in vehicle sales. My suspicion is because of rising interest rates and rising MSRPs and affordability issues for so many people, that this year's spring selling season won't be all that great. Won't be what what dealers would expect or what has happened in the past. That's just my thinking.
I'm right there with you.
I could be wrong.
Non-luxury brands with the least supply, from least to highest here, would be Toyota, Kia, Subaru, Honda, Hyundai, and Volkswagen. All right, so those are going to be the brands that we've continued to harp on this story. Yes. Those are going to be the vehicles that are most difficult to negotiate. However, we have seen Toyotas at MSRP and below MSRP. We've definitely seen Subarus significantly below MSRP. Yes. Hyundais, the whole 9 yards. So less supply means typically higher prices, but you can still negotiate that. Interesting point here, the lower the price category, the tighter the supply.
Go
the haves
figure.
And have-nots. Under $20,000, a segment with a low active supply had a scant 20 days supply, dropping again as it has each of the previous months. Between $20,000 and $30,000 vehicles, their days supply rose to 43. That's good news. The larger segments for supply, those between $30,000 and $50,000, have between 43 and 58 days supply. And $60,000 to $80,000 new cars had a 68 days supply. We recently did the video calling out Honda, Toyota, Subaru because they've essentially Honda has come out. So actually kudos to Honda. They came out and said they got rid of their base models.
Yes.
But Toyota and Subaru have just stopped producing them. This is it in another form. We can see it in the data here.
Absolutely. And I believe, if I'm not mistaken, the average transaction price was over $49,500.
We are approaching 50 grand
in the month of December, so that you can see that the vehicles that are available for sale in number are the more expensive vehicles. And that also puts pressure in the market because there just aren't as many people that find those type of vehicles affordable.
Here we go, Pops. Let's keep going through the data. Except for low-volume, high-performance cars, vehicles most often purchased by middle-income Americans were in the lowest supply. Subcompact and compact cars, minivans, and midsize cars. Also below the national average were full-size, non-luxury SUVs and compact SUVs. The remaining segments were roughly in line with the national averages. Hybrids, which have been extremely low in supply, moved to just above the national average. That could change with gas prices on the rise. Larger and or expensive cars had the highest inventories, along with full-size pickup trucks. Full-size cars and uber luxury vehicles had the most inventory, followed by full-size pickup trucks, high-end luxury cars, sports cars, and luxury cars. Of the 30 best sellers for the 30-day period that ended in December, Toyota, Kia, and Honda had the most models at the low end of supply. Starting at the very bottom were the Corolla, Sportage, Highlander, Telluride, RAV4, CRV, and Camry. The most in-demand, affordable vehicles are the ones with the least supply. Of the 30 best sellers that ended in the last period, large trucks and SUVs from domestic manufacturers had the biggest supply. Ram 1500s, which we have seen going for more than 15% below MSRP. Chevy Silverados, Ford Explorers, GMC Sierras, Ford F-150s. None of those you should be paying anywhere near MSRP on, correct?
Absolutely not.
Supply showed wide variation by DMA.
Dealer marketing area.
In contrast to the past where there was less variation, northern DMAs, led by Minneapolis, St. Paul, followed by Detroit and Denver, had the highest supply. Likely because they are heavier on domestic brands, which have abundant inventory. Southern DMAs, specifically Miami, Fort Lauderdale, and Orlando, Daytona Beach, Melbourne, in Florida, had extremely low supplies. Atlanta and St. Petersburg were also at the low end. Being willing to do an out-of-state deal seems reasonable if you're looking at some of these DMAs.
Well, and, climate has something to do with it as well this time of year.
So what's your read on the room? What's your projection for the next couple months here when it comes to...
We're going to see incentives go up. We're going to continue to see inventories build. My projection is that the new normal will be 2 to 2.4 million new vehicles in inventory available on a monthly basis. Still well below where we were pre-pandemic, but well above where we have been for the past 2 years. For the longest period of time, we were tracking at about 1 million vehicles available every month. So we're getting closer to pre-pandemic levels. Not there yet. Probably never will be there again, at least for some time. But at least we're approaching a modest increase that should allow for discounting and incentives once again.